Stocks fell on Thursday, led by tech shares, as investors poured through the latest corporate earnings reports and mixed U.S. economic data. The Dow Jones Industrial Average dropped 60 points, or 0.2%, and was on pace to snap a 4-day winning streak. The S&P 500 slid 0.6% and the Nasdaq Composite pulled back 1.3%. Shares of Amazon and Microsoft each declined by at least 2%. Facebook, Alphabet and Netflix, which is set to report earnings after the bell, all dropped more than 1%. Apple dipped 1.3%. This has been the best performing group in the stock market this year as investors bet their business models can withstand the coronavirus economic slowdown. Over the next few weeks the core tech titans are set to report earnings, said Dan Ives, an analyst at Wedbush. This will be a pivotal few weeks for investors to gauge how the tech stalwarts' business models trends are holding up in this unprecedented COVID-19 storm and will be a key barometer for overall consumer and enterprise spending trends during this semi-lockdown backdrop. The corporate earnings season began this week and continued with Bank of America reporting better than expected earnings for the previous quarter. However, the stock fell more than 3% as the company set aside $4 billion for coronavirus-related losses. Dow member Johnson & Johnson dipped 0.4% as its full-year guidance dampened the optimism around its quarterly earnings beat. Morgan Stanley popped 2.1% after the company's quarterly earnings easily beat analyst expectations on the back of strong trading revenues. The weekly jobless claims number came in slightly worse than expected. The Labor Department said a total of 1.3 million Americans filed for unemployment benefits last week, compared to Dow Jones estimates of 1.25 million first-time filers. However, retail sales jumped 7.5% in June, topping expectations of a 5.2% increase per Dow Jones. This reading came after May's 17.7% surge, which blew past estimates and was the largest reading on record. Paul Ashworth, chief U economist at Capital Economics, said the U retail sales data could signal a big economic rebound in the third quarter. But with the new wave of infections leading to renewed closures and restriction in some states, we still think the balance of risks to that third quarter forecast lie to the downside, he said. Thursday's moves came following a major sell-off in mainland Chinese stocks, which saw the Shanghai Composite down more than 4% on the day. The decline in Chinese equities followed the release of disappointing retail sales data in China, which dampened the enthusiasm around second-quarter GDP growth of 3.2%. The iShares China Large Cap ETF, FXI, traded more than 2% lower. The iShares MSCI Emerging Markets ETF, EEM, was also under pressure, sliding more than 1%. Wall Street was also coming off strong gains from the previous session, as news regarding a potential coronavirus vaccine lifted investor sentiment.